Welcome to ShortView Trading. It's your morning market hit for Monday the 18th of May. What matters today and this week for traders? Well, markets were better again on Friday with the S&P closing up and then boosted overnight in Asian trading on the back of comments from Jerome Powell talking about the need for more financial support from the government for firms and businesses over the next 3 to 6 months. So with that, the S&P is up around 1.3% overnight, trading at around 28.85. Interestingly, this is a level that the market first reached intraday on 17th of April, about a month ago. Since then, the market's been range bound, and the S&P, as you'll know, has twice tested its 61.8% golden retracement ratio. You can see that in the chart in front of you now. That's been acting as a key resistance level in recent weeks, and indeed widening the chart out to a much longer time frame. You can see that the S&P 500 has got a number of key resistance levels at around 2930 to 3000. Over the last few years, only once has it meaningfully broke above those levels, i.e. at the start of this year. So the Fibonacci level is a key resistance level. That sort of 2950 to 3000 range is a key resistance level. And similar sort of comments can be made about the Nasdaq, albeit it's been a bit stronger than the S&P in the rebound, given that tech's been the center of strength. But as you can see from the Nasdaq Fibonacci chart, it too is sitting below its recent intraday highs. But looking more broadly, there's a bunch of cyclical indicators and cyclical equity market sectors whose price action is troubling. Of note in particular interest, the price action in the banks looks very poor. There's an argument that technically US banks have broken below their wedge that's been forming over recent weeks. Equally, if you look at global banks, they're trading around their lows of recent weeks. And of course, bond yields also trading near their lows, consistent with that behavior and price action of the bank sector. Over and above that, airlines made a new low on Friday, albeit only just. REITs made a new low, and transports made a new low as well, both absolute and relative to the S&P 500. None of these are good signs for the outlook for the global and indeed US economy. And all of them add to the argument that markets moved higher in recent weeks from its March 23rd low, primarily on liquidity and not on fundamentals. Over and above those factors, some short-term models have some troubling messages. In particular, I'd highlight the short-term put-to-call ratio, where on Friday we saw removal of downside put protection in portfolios and the underlying one-day indicator go back to sell, albeit we principally watch the 3-day moving average. But of course, the one-day moving there will likely lead to the 3-day doing that as well. Over and above that, the high yield spreads continue to not confirm the move in the VIX. As you can see, that divergence continues to play out. Spreads widened again on Friday. For full detail on how we're playing this market on a 1 to 2 week basis, please see today's daily rag available to subscribers and as a trial on the website. So what are we watching today and this week? There's a lot of Fed speakers out this week, led of course by Jerome Powell on Tuesday in front of the Senate Banking Committee. But we also have Williams and Clarida speaking this week, both key Fed governors. We also have the Chinese National People's Congress starting on Friday. This is the annual get-together that's been delayed from March. Often you get several policy announcements coming out of it. Given the economic weakness, it's expected there'll be some fiscal policy stimulus quite likely announced on Friday or over the weekend. Over and above that is flash PMIs across the globe later this week. A first take on economic activity in May. We also have the Fed and the ECB minutes published this week. And over and above that, of course, weekly jobless claims will once again be interesting on Thursday, along with the Philly Fed Business Conditions Index and some continued US corporate earnings. So that's it from us. That's your morning market hit for Monday, 18th of May. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Thank you and trade well.